Today we're going to be learning how to day trade futures. So this is specifically for day trading futures. Futures are, commodities, and it's agreement basically to buy at a certain price, right? So before you kind of overthink everything, it's just basically a way for you to trade actual price value every single day in the markets. And this is like a game changer. I'm going to teach you is like how to use other people's money using this setup to trade futures and how to make money and every single week. But this is just going to be trading futures, and I'm going to be going over a very simple strategy that is allowing me to, make anywhere from 1,000 to 3,000 or more per day, which is, real money, using other people's money as well. So I'm not leveraging any of my own capital, and I'm going to teach you guys how to basically set this whole thing up. And there's a lot of value in this, which is cool. It does go against kind of, wealth making principles, which is I don't really own any assets, right? And I'm to create wealth, you have to own assets. But the leverage where you can use other people's money, you can make profits in a very limited amount of time. That's why I believe this is incredibly valuable for people. Okay, so this is going to be the beginner's guide. So I'm going to kind of break down how this system works. So basically right now I'm using NinjaTrader to actually do the trades. I'm using TopStep. They are the company that is giving the money that you can trade with. So whenever you guys want to open up an account with them, I'll have a link that you guys can do to get a coupon. But basically this is the package, right? So you pay $50 a month or $100 a month or $150 a month. And you can get 3 of these accounts, guys, which is really cool. When you're just starting off, just do the 50,000 or just paper trade. Paper trading is totally free. Paper trading is where you're pretending to trade essentially, right? But you pay $150. They'll give you an account for $150,000 that you can trade futures with. This is awesome, right? $150, you get a $150,000 account. So the rules are once you hit $9,000, then you can start making profits. Okay. After $9,000, the first $5,000 gets paid out directly to you right away. And then after that, you're going to be able to make basically 90% of the profits, and then they keep 10% of the profits. But you have to earn an actual like real funded account where you can actually make money. Okay. Your best day can't be more than 50% of your total profits. So I've done that a lot, and I keep not, it just sucks. I've had a couple days where I made $5,000 profit, and then they basically kicked me back to the beginning. So you have to like lose money just to make them happy. It's kind of stupid. You don't want to lose more than $3,000, and you don't want your account to ever go below $145,000. Okay, and then you can use these people's money for just $150 to basically trade futures, and it's a game changer for people. And then I'm using TradingView to actually review the trades and the setups and stuff like that. Now, what's cool is there's this other software that I paid for, Safe Day Trading. So I bought their course, paid a whole bunch of money, and all you get really is these little dots, and you get kind of like a good idea of how to do the trading essentially. So whenever you see the green dot, the red dot, it's going down. Whenever you see the green dot, it's going up, right? And it's fairly accurate. But this is TradingView. This is just what I use to analyze different trades and different things. The system that I'm going to teach you, we're only going to be trading 3 things. We're going to be trading E-mini Dow, which is the Dow. We're going to be trading gold. We're going to be trading crude oil. And the reason that we trade these 3 is because I want to keep it simple. There's so much money to be made with just these 3 commodities and these 3 Dow Jones that I don't need a whole bunch of other ones, And honestly, I have been trading the NASDAQ and the S&P 500, but I just find that these trade too irrationally. They trade too fast, and that's why I keep going back to just trading the Dow. And when it trades too fast, it just basically stops me out, and I lose money, and it pisses me off, right? I'd rather keep making money than do anything else. So this is how I review the stocks, the futures as they trade, and then we use NinjaTrader to actually pick which trades we're going to do. This is where I actually take the trades inside of this software. And the reason I don't look at the trades just in here is because it's just real basic, right? So I want this more advanced information. But as you can see here, this is NinjaTrader. This is connected to my TopStep account. Can you guys see this like little box that says NinjaTrader on my screen? But you can literally trade. This is real money in the markets. And you have 2 accounts with them right now. And then you can also just trade practice if you want to get started. But I have $150,000 in here that I can trade, and I can buy into these different positions, and I can make money with. Okay. So the big like epiphany is everybody can trade. You don't have to use your own money. You leverage other people's money. You have the trading view set up with the safe day trading, where it kind of gives you, hey, green dot means it's time to buy, red dot means it's time to sell. Okay. Not trying to make it too complicated. If you've never traded before, it happens. But we're going to go into it. Okay. So the cons of day trading and doing this kind of full time, you're going to get burned. Like, everybody's going to lose money. Even the best traders in the world are probably only winning, maybe 80% of the time, losing 20% of the time. And you're going to think you should quit a lot. It's just part of the game. It's a psychological warfare. Everything that happens in the stock market goes against like your best, how you think things should go. Like the thing that I like about the stock market is it's a machine. The only rules are the ones that are in place. Other than that, it doesn't care about you. It doesn't care about anybody else. It's just numbers. And once you master trading, you can literally take as much money as you want from the markets at will almost, but you have to become one of the top traders. The markets are going to basically play games with your emotions. It's going to stress you out in the beginning. It takes a lot of self-control and tons of discipline. You have to learn how to think differently. You don't have to be a master trader to do a master trade. Okay. You just have to click a button. It's not that hard. It's not too crazy. But if you want to become a master trader, the key thing is you have to think differently. Okay. You have to understand where the market's going, how it's going, what the bears are thinking, what the bulls are thinking, and you have to be able to take action and be cool. All right. The other thing that I'm finding is it's just super distracting. Okay. So the difference between day trading, options, and stocks and everything in futures is that futures are pretty much 24/7. Okay. The most movement happens whenever the markets are open, but you can trade, 6 days a week, like 23 hours a day, which is ridiculous. But I don't recommend ever trading in a sideways market. So I'll show you guys when the best movements are happening, but it's distracting. There's red colors, there's green colors, there's opening bells, there's money. They've got it down to make it very distracting is what I'm trying to say. Okay. So that's one thing that you're going to learn. And you can self-sabotage yourself really hard, right? That's another con of this whole stock trading business. If you're having a bad day and you start trading, you'll just start losing money and losing money and losing money, and then you'll just dig yourself in a hole, right? It happens to a lot of good traders. They'll be, myself included. I'll make tons and tons of money, and then I'll just have one shitty day, and it's just like loss, right? So you can self-sabotage pretty hard. It is a grind, right? You only have to be there 1 to 2 hours a day. So it's not that much of a grind, but you still got to do research. You still have to be at your computer. You still have to have the right mindset. You still have to have discipline, and you got to show up every day. That's another reason it's not a totally leveraged option for people, because you have to be doing the trades, right? This is not the AI trading stuff. This is you trading futures so you can make a lot of money. And then you got to wake up really early and you got to work late. All right. I'm on Pacific time and it's early, man. It's like I got to wake up at like 5 o'clock to hit the opening bell. Okay. So those are the cons. I'm just telling you guys the reality of this. Here's the positive stuff. You can easily make $10,000 a week. Right. My goal right now is I make anywhere from $1,000 to $3,000 per day. And then I stop and I try and just totally ignore it and focus on other stuff. But once you get this down and the system that I'm literally about to teach you guys, it works. You just have to work it, and you have to basically have discipline, and you have to have self-control. Okay. But you can make a ridiculous amount of money, which is why I'm bringing it to show you guys and why I want to teach this more. You're your own boss. You just work for yourself, right? You don't have to do anything else. You can do this from anywhere in the world. You just need a computer and you need internet. You only have to trade a couple hours a day, and then you're done for the rest of the day. If I wake up at, 5:30 and I make a couple thousand, I don't have to trade anymore for the rest of the day. Obviously, I've got a bunch of other businesses, but for most people, they don't have to do anything else. They're good to go. Once you're a master of this skill, though, you can literally take as much money as you want from the stock market at will. That's the real power. Okay. And what I'm going to teach you, again, is a very simple system that works. And once you master it and you show up every day and you understand it, you can just take and take and take. Now, the thing that is also kind of an interesting con of the stock market, but it could be pro, is whenever you make money in the stock market, you're literally taking money from somebody else. It doesn't care who it is or what's going on. I imagine it's big fat hedge fund people that I'm taking my little cut of the pie, right? But whenever you lose money, somebody else is getting it. Whenever you make money, you're literally taking it from somebody else. So you have to basically learn that game. And then you're going to learn a new level of self-control. Okay. The hardest part of trading is sticking to your own discipline and sticking to your own rules. Okay. Because you have to have a plan. You have to work the plan. And then whenever you start to get cocky, it'll humble you pretty quick. And here's the problem that most traders get into is like, they think that they have to know every single thing about the market, right? So then they spend most of their time studying the market and learning more about the market, when in reality, especially with this system, it's mostly just your own psychology, your own relationship with money, and understanding how to buy the best trades possible, right? So you don't have to know all this stuff. The price and the amount of the commodity are fixed at the time of the agreement. Most contracts contemplate the agreement will be fulfilled by actual delivery of the commodity. So like, it's kind of weird. Futures, in hypothetically, if you like hold on to the contract, you'll get like 100 barrels of gold, like or barrels of oil shipped to your house or whatever, in theory. But you're basically just buying the rights to the price of a contract of what you think it's going to be. So futures are a totally different ballgame than stock. It's basically what the price is going to be of the commodity in the future, right? And you're basically allowed to hold on to the contract, and you can either buy it or sell it, but you can buy long and you can short stocks in real life with real price action, and you can't hold for very long, right? You don't want to hold these contracts for more than a couple of days. So it's very, very much all day trading. Okay. So let's just go into like the basics of trading. So for futures, especially, the hours are 6 days a week. They basically stop on Saturday or Friday at 1 o'clock, and then they open up again on Sunday at 3 p.m. Okay. That's 3 p.m. Pacific time, 6 p.m. Eastern time. Monday, they're open 24 hours. It's basically 24 hours a day, 6 days a week, though. There's 1 hour every day between for market maintenance, right? They close for maintenance between the hours of 1 p.m. PST and 2 p.m. PST, Monday through Friday. And then they close on Fridays. But this is like the main thing that I wanted to show you guys. So whenever there's new money that comes into the markets are going to move, right? So the new money comes in every morning and when I say new money, I'm saying like the big hedge funds or the people that are leveraging these hedge funds are allowed to trade during the hours of these times during the day. So there's going to be big fluctuations in the markets, and that's when we're going to make the most money. Okay. So the New York money comes in at 9 a.m. Asia money comes in at 5 p.m. European money comes in at 1 a.m. in the morning. Okay. And most of the time, though, the biggest fluctuations are going to be, or at least the times that I trade, is going to be, 9 a.m. Eastern time, and then 5 p.m. Eastern time. Okay. So those are the times that you can actually make the most money and the biggest fluctuation in the markets. This is the key thing to this whole strategy that I'm going to teach you. It's basically called zone trading. It's basically using the Fibonacci code to basically know when the markets are going to make a move and when to get into the markets. Okay. So this is going to be, you see how there's this channel that goes up and down? This is what I want you guys to pay attention to. And this is how we're able to predict what the markets are going to do with a very high win rate, more than anything else that I've found. And this is from years and years and years of stock trading, options, everything else. And now I'm just using it for the futures market, and it's crushing. Okay, so you have your resistance. You see how up every time that the stocks come up to this point, it goes back down. And then here's your support. So the support is where you don't want it to go. Basically the bulls are buying in at this level. And when people buy, the price goes up. Okay. And then when people sell, the price goes down. Okay. And then this is where you want to know when you should get in is whenever this area is broken. Okay. So if it broke to the downside, that means it's going down to the next level. If it breaks to the upside, it's going to go up to the next level. And I'm going to show you guys more about this in a minute once we get done with just kind of going over the basics. But this is essentially what I want you guys to really learn is understanding the support levels and the resistance levels. And then when to buy into a trade is whenever these are broken. Okay. Because that means that it's going to move. This is what I want you also to know is candlestick patterns. Okay. This is very basic, but when you're looking at these candles, I want you to understand that this is called a hammer stick. This is going to be a bear candle. So whenever you see this price action, it means it's probably going to go up. That means that they tried to sell it all out down here and it ended up coming back up to the top of the price. This is called a shooting star candlestick. So that means that they tried to keep the price as high as possible, but it went down. Okay. And we're just going to go over candlesticks just real quick. And then I'm going to teach you guys this whole strategy, but you have to know a couple of these things before I can show you what's going to make you the most money. Okay. So the candlestick reading charts are basically, this is the highest price. This is the lowest price that it was for that period of time, right? You can look at candlesticks on a 1 minute, 5 minute, 3 minute, hour long, whatever you want. But this is basically what you're looking for. So this is what the opening price was. This is what the closing price was. And this would be red, right? It's blacked out right now. And this would be green. Okay. So this is a good candle. This is a going down candle essentially. So this is called a bullish engulfing pattern. It means that it went down, right? And then this overcame this smaller candle, which means this is probably going to go back up. And just learning how to read candles on your own time is going to be very, very powerful because you're going to be able to get a good feel for what the market is doing. Okay. I just want to basically let you understand, like, we're going to be reading candles. We're going to be looking at the Fibonacci sequence, and we're going to be looking at the volume. Okay. Those are our 3 indicators. And you always need 3 indicators to be going in the correct direction before you purchase a trade. Otherwise, we're gambling, right? We have to have a plan. Okay. So this is bearish. It went all the way up and it tried to go up to this price, and then it came back down to this price. But understanding how candlesticks work is going to allow you to have a better feel for when you're going to want to get into a trade, right? You can learn more about candlesticks on your own, but I just want to make sure that you guys know the basics of what you're going to be looking for. So that you know when to get in, okay? Candlestick patterns. And then now we're going to start talking about the Fibonacci retracements, okay? And the Fibonacci code is kind of cool. If you ever have time to learn about it, it's essentially, there's like a certain set of numbers for the universe and how everything works. And it's not only kind of like woo-woo, it's also a lot of other traders are using the Fibonacci code to make trades and decide, see, like I already have one on this one, when to get into different trades, so that you can basically learn from it. So you see how I'm using these different zones? This is the whole trading secret of how to make money with futures. It's essentially called zone trading because I call it, the zones are going to be between these 2 lines. This is kind of where the price is at right now for gold. It's at 19,993. And the way that the Fibonacci is going to work is you need to have a really high point and a very low point, okay? And these are where you're going to basically set up your zones. So you're going to draw from here all the way to here. Okay. And you're going to basically say, this is essentially what has been happening. This is where the stocks have been retracing. This is how it's been working. And if you take a little picture of it, or if you look at it pretty good, you're going to see that there's always levels of resistance at the 50% mark at the different lines. You're going to see how it almost always works. It's kind of crazy. So like it's like we went down, we hit this line, we went back up, we tried to go all the way up to this one, and we didn't make it. And we went back down, 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 down. We hit about right here at this line. We bounced back up. And whenever we break through one of these different zones, that's when you want to enter. Okay. So like this little chunk right here was kind of a bad example, but it broke down and it tried to go down, but then it picked back up and it bounced back up. But I use these basically to predict where the market is going to go. So first of all, we can kind of like look at it, and we'll just be real basic. It's like, it looks like it went, the waves went down, went up, went down, and went all the way up here. And now it came back down here. And now we're just kind of like stalling. All right. So we don't really know what's going to happen this week. It's been a very sideways market. We've been bouncing around right here, and it looks like we finally bounced up, and we're at least going to go back up here. So let me see if I can move this real quick. That didn't work. But this is how you're going to be able to determine which way the market is going to go. I would say with like an 80% certainty. So we're going to do this one, and then we're going to come in here now. And we're going to find a smaller one. The problem is there's just not been a lot of movements, right? It's been very sideways, and you never really want to trade in a sideways market. But as you can see, like right here is probably on the opening day. So the Fibonacci sequence, the way you do it is you find the highest high down to the lowest low. And that's basically how you're going to be able to figure it out. And then you want to find smaller ones, but this one has been very sideways. Let me see if I can actually find one more. So this has had a little more chop, because if it's just going sideways, that means it's been stuck in one of these channels, just not doing anything. So it's either going to break up or it's going to break down from the inside of one of these channels. So like right now for crude oil went really high, and now it's kind of coming back down. I want to have a big one, right? That's like attached to, so you basically are going to go to, where's the highest high? The highest high was right about here. And you see how both times it came up to this point and it didn't break through? That tells me that that's where a line of resistance is. Okay. And then we're going to go all the way down and to the lowest low. So it basically, and like, you don't have to overthink it. The main thing that we're looking for is what's going to happen next, right? So my entry points are going to be an if this, then that kind of scenario, right? So if we break this resistance line, then it's going to go down. Right. But if we pop up off this resistance line, it's going to go up. Okay. So I'm going to basically wait for the opening bell. I'm going to see this line is at about, 1464 or whatever that is. And if it goes below this, then I'm going to get in as a short, and I'm going to buy all in, and I'm going to say it's going down because now this is the new level of resistance that we've just created. And I'm going to get in there. If it comes down here and then it bounces up, I'm going to get back in because I know it's going to go back up to this level. Does that make sense? So this is what the zone is. So this is how you figure it out. And you see like there's been resistance right here. It came down, it bounced back up, it went back up to this resistance, went down. So it's been very like stuck in this channel, and then it broke through right here. Boom. That would have been a huge trade. So like we would have wanted to get in like right here on a short. And then now we're just going to basically watch it. If it stays right here and it just stays sideways, I'm not going to get in. I don't want to get in a sideways market ever. I want to wait until I see the opportunity that it's either going to make a big move down or it's going to make a big move up. And then I'm going to get in, right? And I'm going to ease in where basically I buy in and I put my stop loss back at this exact retracement, right? So if I see it break down, I'm going to put my stop loss at this level. And then as it goes down, I'm just going to let it ride, let it ride, let it ride, let it ride. And we really want it to go all the way down. Most of the time the markets they go down, they pull back, they go up, they pull back, right? But we want to understand, this is my prediction, okay? It's an if this, then that scenario based on the Fibonacci code, as well as the volume that's going on in the markets. So for NASDAQ, 831,000 contracts. So I know that this thing is going to move, man. That's a lot of volume that's going on. It is going to fly. And I know that it's either going to fly down or it's going to fly up. And now I have my rule. My rule is if we break this barrier, I'm going to short it. If we stay in the middle, I'm not going to get in. If we start to come back up off of this and we break through and we don't basically break through this bottom, then I'm going to go long and I'm going to ride it all the way up. Okay. And you want to do this before the market's open, right? Or you want to do this before you enter your trade is what I should say. Right. And you want to know, where are these zones? And what's cool about futures is you can short everything or you can go long with everything. Just like that, like anything, like there's no barriers basically. So this is NinjaTrader. This is where I actually make my trades. And right now I have it set up where I'll either do a 1 contract, 3 contract, or 5 contracts. If I'm super confident that what's about to happen is going to happen, I'll do 5 contracts, and I can trade up to 15 contracts per Top Step account. Okay. So that's using other people's money. I can buy up to 15 of these things. So when I enter into a contract, I typically just do like 3. And then if it's going my way, I'll buy 5, and then I'll just ride it all the way out. You know what I mean? If it's not going my way, I can get out real quick. I can't enter a trade right now because it's not open, but you see over here in the top right corner, it says buy market. So that means that it's going to go long, or it says sell market. And that means that it's going to go short. And then it says buy the ask or sell the ask. That's just basically, instead of, if you buy the market, you're always going to be like you're going to get the worst price, but you're going to get in right away. Right. And if you sell the market, it's the same thing. But if you buy the ask, you might not get your contract filled because the stock will be moving too quickly. Another thing is you can just close all your entry points. You can also just reverse it. I didn't know what this reverse button did, and I lost a bunch of money. It'll be going a certain direction, and then you can say, oh, it's going to switch directions now, and you can buy in, and it will just literally flip your contracts from a buy to a sell. So that you guys can learn that. And you can set up all your custom stuff. So right now I have a stop loss of 17, and I used to have a profit take of about 25, but I just decided, hey, if it's going profitable, I don't want to get taken out. But I want to always have a stop loss. You can't get in when the markets are closed though. The setup is you have NinjaTrader where you actually make your trades. You have TradingView to review what it is. And then you go through Top Step if you want to use other people's money. Right. So you can buy up to 3 of these contracts or 3 of these deals for $150K each. So you'll have 3 accounts where you can trade $150,000. They have their own kind of rules before you can start to make a profit, but you use their money, right? So you make $9,000 profit. That goes into the next account where you're actually able to make profits. The first $5,000 that you make in that account go straight into your pocket. After that, you get 90% of the profits. They get 10% of the profits, right? And you never want to lose more than 4,500 or else your account gets shut down. Mm-hmm. It's like a fucking game, guys. It's ridiculous that this is even a thing that we can do. And now we just need to create our trading plan, execute our trading plan, and not get too greedy, right? And the biggest problem that I found is I want to make all my money in 2 days, right? So I just aggressively trade and then I start to lose all my profits. There's no time frame. The biggest thing that I want you guys to understand is that I want you to be set up and have a plan for what you're going to do before you trade, right? Otherwise it's just gambling. You're just throwing money into the markets, right? What we want to do though is we want to have a strategy, and the strategy is do this Fibonacci sequence, look at the volume that's going to be happening, because we want to be in stocks that are seriously going to move. And then you want to basically get in at the right time and understand where you're going to get out. right? If you're trying to figure out, well, when should I get out? And if it goes down, you're just basically going to make another Fibonacci sequence where you click from where it is right now to where it might go. Part of the rules, guys, is you never want to trade in a sideways market because it's just going to go against you every single time. The whales are just going to eat you up, right? Because it's just like, oh, I think it's going to break through. Maybe it's not. You're just guessing, right? So this one right here, it looks like we're about to test this upper level right here. So I'm only going to enter this trade once we break through this level of resistance at 1994. And then let me see. So replay. Let me find one that's had a lot of action and we can do maybe some of the replays. And natural gas and oil and stuff like that, they have a lot of news action that basically, but mostly what I trade is basically, again, the Dow, the gold, and the oil. So if we were going to set up our Fibonacci's for over here, we would say, okay, so here is where we went right here. So we're going to be looking at these different levels, right? So it seems like it kind of chopped a while between 1987 and 1994. So then it stopped. It broke through this level. So that would be an interesting place to watch it. But then it came right back up. So now you see that it's going to basically hop around this different little levels for a little while. So now that we have a different low, we're going to set up another Fibonacci and we're going to say, okay, so it's going from here to here. And it's going to have these real tiny retracements areas, right? And we're going to be looking at it and we're going to basically be deciding, okay, we can make a little bit of money. It's called scalping, where we just basically do it here. But you see how here's this little zone right here. This is what it's stuck in right now. Not very exciting. This little tiny zone is not going to make us a ton of money until it breaks through one of these. Then I'll think about getting it. And we want to get like a definite buy-in that it's going to bust through. So you see how this candlestick specifically broke through, but then it all came right back up. That's going to be more or less a bearish hammer. This is what I was trying to teach you guys, which means it's probably going to go back up, but we'll see what it does. And then it comes back up a little bit and then sideways, sideways, sideways. We're waiting for it to break out of one of these zones. And then we're going to basically want to get in, right? So it's going sideways and you see this volume is picking up. It just broke through the zone. I want to get in this trade right now. And you're going to see right here, it broke through. Not only did it break through this top zone we were stuck in, and look at what happened right when it broke through. Boom, big green candlestick. Literally filled up the entire next zone. So we would want to enter at that level where you see how it broke through this zone where it was stuck in this little area right here. Nothing's happening, nothing's happening, nothing's happening. And then it just like rockets to the top. And now we have positive momentum and we have the volume down here. Okay. Usually before I get in, I want to have at least 3 things that are indicating that this is a good move. I haven't talked about it yet, but this like weird green and orange thing, this is called the Ikimoshu cloud. But it's another indicator of what's going to be happening. And it's green right here, right? It opens up, it has a little down moment, and then it's more green again. I think that was a pretty good example of like how this zone trading works. So you see that it's stuck in this zone. I don't want to enter into a sideways market at all. This is the last thing I want to do. A sideways market will just take my money. But as soon as it breaks out of this zone, I know it's going to go up to this zone, right? And then now we're in this zone and we kind of like hit like a little bit of a ball, but then we bounce all the way to the top of this one, came back down, we retraced, and now we're going up again. Okay. And then let's see if we can do a little more. And it just basically keeps breaking zones. And you probably want to take profits once it goes sideways again. And you might be like, well, where do I get out? And it's up to you, really. How long do you want to stay in the trade? How much profits do you want to make? I mean, our prediction was that it was going to stop at a couple of those. So I would have taken profits at each new level that we would have hit. And now we've hit a very new high though, right? So now we have a new distinct level that it's going to be at. So we have this one down here, and we have this one right here, and we're going to watch it again. And now we can kind of ride it down, right? And now we can start to make money as it goes down. So this is between 1 o'clock and 2:30 that this is all happening, that we could have made. And for gold, I think it's $5 a point. Like each point, I mean, is worth about $50, right? So we literally went from basically 1990 all the way up to 2000. So that's 10 points. If we had 5 contract, that's $5,000 that we could have made in 30 minutes. So this is like pretty powerful stuff. So we went back up, we tested this upper barrier, right? We didn't break through. We came back down. You probably could have made a little bit of money in that chunk. We tested it again. We broke through. So we would probably get in right there. Now we're going to the moon, going to the moon, going to the moon. So this zone stuff really works, guys. It shows you a good idea. You just have to understand it a little bit. And I know it's fairly confusing in the beginning, but this Fibonacci sequence is game changer. And it's not just that I'm showing it to you. It's literally the numbers of everything that we have in the universe, as well as most traders are trading off it as well. So if other traders are trading in these zones, that means that a lot of people are going to get out at those certain levels, right? So that's why it's good just to kind of copy. And then you see the volume is picking up right here. So whenever there's this much volume, that means there's just a lot of action going on. So we came back down, we broke through, bam. Now we're going down. Now we're riding it down. Now we're going to see if it comes back up. It can't quite make it back up to this new level. Oh, it does. Now it's going to either break through or it's going to pop back down, and it's going back down. So you see how it's in these different zones, and that's when we want to get in. And we never want to get in when it's going sideways, like over here. We just want to get in when it's making a big move, because that's when the money's made. So the big 3 indicators, though, that you're going to learn is you're going to learn how to read candlesticks, right? Which is basically literally what's happening, where people are getting into these trades, what people are doing. And like understanding how the candlestick patterns work is a big key part of knowing when to enter. You're going to understand that the Fibonacci sequence and those different zones is how we're going to make the profits, right? So in this 50% rate right here, there's always going to be a big bit of resistance at the 50% mark. Okay. And then volume. My main way that I made a lot of money with stocks was just waking up in the morning, figuring out what penny stocks have the absolute most volume, and then throwing all my money in it and letting it ride for the first couple minutes. That was more gambling than what I'm doing now. But volume is always a key thing, because wherever there is volume, that means that there's demand, right? Which means there's going to be price movement. Volume just means that there's a lot of action going on, which means there's a lot of other people in the market that we can basically take some money from, and we can kind of grow, and we can basically grow our little portfolio. So that's basically it, though, for the zone trading, though. And the zone trading is the only strategy that I want to talk about, because it works. It's simple. It's not too complicated. We only trade 3 futures, right? We trade the Dow minis, which is $5 a trade on the Dow. We trade gold. We trade oil. And the reason that we do this is because there's unlimited amount of stupid futures and stupid stocks that we can trade. These 3 are the big ones. These 3, I can use the zone trading plan, and I can make profits because they're very consistent. Everyone trades them. Everybody knows that gold and oil and the Dow are constantly moving, and there's lots of volume. I showed you guys the NASDAQ and the S&P, and again, those just move very irrational. The Dow, it does the same pattern, but it just moves a lot slower, so we're able to make a lot of money doing that. Gold is a very consistent mover, especially right now when there's uncertainty in the market, and then oil is just absolutely going crazy because of all the things that are going on in the world, but it's a good commodity to trade. Here's what I was talking about. If you buy one contract for gold, it's 100 troy ounces that you're buying the contract for. So if you hold on to that contract long enough, you're going to have to execute on the contract and buy 100 ounces of gold. This is like the simple strategy, though, that's making a lot of money. So how do we break it down? Yeah. So the pre-market, okay? And with futures, there isn't really a pre-market. The pre-market is your own little zone, your own little world before you enter the trades, right? Just because we're using other people's money doesn't mean that we should neglect the responsibility of each trade that we put in. A professional trader understands the risk and is responsible for every trade that they put in and they enter into the market, right? I said it's a game, but it's not really a game. It's something you have to take very serious, because there's real money being traded, even if it's not your money. If you want it to become your money, you have to respect that money like it was your own, okay? So before you enter any trades, you're going to want to do exactly what we just did, where we looked at the market, right? We analyzed where the Fibonacci zones are, and we created our if this, then that plan. Okay. So you want to look at those 3: oil, the Dow, and then gold. You want to make your plan. You want to say, okay, if it breaks through this line of resistance, I'm going to get in, and I believe it's going to go down to this mark, and here's where I'm going to take profit. So before you enter your trades, it's not just like, oh, I feel like this is going to go up, right? That's a recipe for disaster. The market doesn't care what you feel like. The market's going to do what it's going to do. So you need to have your if this, then that plan. And it's never going to be this is what's going to happen in the market plan. Because again, the best traders in the world are still only maybe making 80% of the right trades, 20% they're losing. Okay. So you want to be in that same range, though. You want to make 10 trades. You want to track what the trades are, and you want to win as many as possible. And if you're getting anything less, then if you're losing more than 5 trades out of 10, then you need to go back to your plan and reanalyze what's going on. Okay. And then you do not want to take any trades that are not set up correctly. This is very big. Again, if you feel like, oh, this is going to be a good trade, you're fucking up. You need to have a plan as to why I'm getting in this trade. When am I going to get out? What is the reasoning behind it, right? And then you only want to get into trades that are set up correctly. I can't tell you enough. even if you get into a trade and you lose money, but it looked like it was going to be like everything was good, you're going to feel a lot better about yourself than just getting in a random trade and then losing money. So you always want to have a plan, and you want to basically make sure that you're only taking trades that are set up correctly. And you want to just set yourself up for success. And you kind of want to maybe think about, is there any news coming out today? You know, what is my prediction with the market? What is going to happen? And how much money can I really make? And how much am I going to be risking, right? So set yourself up for success. And then I always recommend having a trading journal. So before you enter the trades for the day, I would basically say, these are the 3 that I'm trading. This is what I believe is going to happen. And the other thing that I didn't really go over is just like the general, how you make your plan is you just look at the general movement of the stock, right? So it's kind of hard to tell because a lot of them are just kind of all over the place. So like the general movement of gold right now is just like up. We had this real big wave. Even if you're just like new to trades, like you can see how these are just like waves, right? So you want to catch a wave and you want to ride it all the way up. Gold doesn't look like it's stopping right now. You know, maybe this is the top. But it's gone up here before a long time ago to 2000. So there's definitely some resistance where it's at right now. So this is where you can make a really big trade, but the general move of what gold is doing is going up more and more and more. So you just got to take that into your thoughts of it. I think it's going to go down. Well, gold looks like it's just going to keep going up, right? So at the end of the day, you can make some money on the short term with it going down, but you're going to make more money with it going up. Let's look at the Dow as well. The general vibe of the Dow is it's going down, right? And it doesn't take a rocket scientist. You see, it was really high up here. Now it's kind of going down. Sorry, I've got all these like things covering it up. This is all the Fibonacci stuff. So you basically want to, before you enter your trades, you want to say the overall look and feel of the Dow right now is that it's going down. The overall look and feel of gold is that it's going up. For oil, you know, though it's kind of all over the place. So for oil right now, it's a little sideways. So it's sideways, but it's more likely going up. In the long term, it's going up. In the short run, it looks like it's probably stuck inside of this channel. So we'll have to wait for it to break out to get in. So that's just kind of like how you're going to set up your plan. You're going to say the overall market for this, the overall trade for this is it's either going up or it looks like it's going down. The short term is that it's in between these two zones. The if this, then that is that if it breaks this zone, it's going down. If it goes above this zone, it's going up. And those are going to be my entry points. And then you just really want to make sure you don't get any trades that don't check all those boxes, right? Because otherwise you're just gambling. And now it's time to actually do the trading. You really want to, again, you really only want to take the winning setups. The winning setups is what's going to make you the most money. You want to track your trades, right? You want to have like a journal that says, these are the trades that I took this week. How many did I win? How many did I lose? I would definitely try and track at least 10 a day. You don't have to make that many trades. Hopefully you're only making a few big winning trades, right? But you just want to track your trades and you want to see out of 10, how many did I win? How many did I lose? If you lose more than 5 out of 10 trades, you got to come up with a new strategy and you got to shake yourself up and make sure that you are not just wasting your time. You want to set stop losses. And stop losses with the NinjaTrader is very easy to set. That's another reason why I like NinjaTrader right now. Just as soon as you buy it, it already sets your stop loss for you and you can move it. And then when you're taking profits, instead of getting out, you can just slowly move your stop loss into the money more and more and let it ride. You want to cut your losses fast. Okay, that's, if I'm talking to myself, this is the hardest thing for me as well as the hardest thing for most people. It's like, oh, I'm losing, $300. If I get out now, I'm going to lose $300. And it's just like, you just torture yourself. And then it goes to 500 and 600. And now you're even more in a hole. You got to cut your losses fast, especially if you have like your plan and it's an if this, then that. And then it goes the opposite direction of what you thought it was going to be. You got to say, okay, this trade didn't do what I thought I was going to do. I got to get out and then I'll readjust and I'll get back in. And then you got to let your winners ride. That's another thing. I mean, that's the only way that you'll make any money is if when you get a winning trade, you don't just like get greedy and panic. You got to let those winners ride. You can take profit, always take profit, because when it's green, like there's literally, hundreds or thousands of dollars just sitting there and you can grab it, but you want to let some of your winners ride because you're going to make more money in those big wins. And that's going to cut all your losses than anything else. So let your winners ride. You got to be a cool hand Luke. I don't know what that is, but my trading mentor, he's like, yeah, you got to be cool hand Luke. You got to say, this is what's going to happen, but then you got to be flexible. And if what you thought isn't going to happen, you got to be able to readjust and get it back in and not take it personally, not get emotionally attached to the money or any of that. And then you got to stick to your strategy, right? Have your plan, stick to your strategy, and basically just always try and take the best trades possible. That's how you're going to make a lot of money. You just have to, if you get into a trade that everything looks right and then it goes the other way, at least you still got into the trade and you can feel good because you did your due diligence. It just didn't go your way that day. Okay. And then don't just take trades on a whim. I think that I can predict the future. When the only time I really make a lot of money is when I stick to my strategy. So don't try and be too crazy. And then don't let your emotions run the show, and do not revenge trade. Right. When I was beginning, I would do a lot of revenge trading, where that's where you basically lose like $300 and you're like, I'm going to fucking get my goddamn money back. And then you just keep losing trades. Right. So no, don't revenge trade. I think that's a interesting word, but I think it's real. Okay. Once you're done trading for the day, right? You've made your $1,000 or you've made $3,000, whatever your goal is. You want to look back at what trades worked. Where did you make most of your money? And then what is your trades tomorrow looking like? What are your predictions for tomorrow before the market? That way you're constantly like analyzing these three stocks. You're really understanding how they move, not stocks, but these three categories, and understanding how they move and predicting where you're going to make money tomorrow, right? Now you can start to think about it in your subconscious. You're also done for the day. And this literally always happens in like about an hour or two, and then you're done for the day, right? So you do your pre-trading, mantra, meditation, whatever you got to do. You're focused. You understand. You have a plan. You do the trades, right? You execute the trades without letting your emotions get in the way. You stuck to the plan. You had the discipline. You get out of the trades. You're done for the day. You plan your day for tomorrow, and then you're done. And now this is how you can literally make, thousands of dollars a day using other people's money, trading futures, only working a couple hours a day. So that was the whole presentation. I'll see you at the top.